What if someone sent thousands of fake employees to copy your best worker, answer by answer, and used it all to build a cheaper version of them? That's not a movie plot. That's the allegation shaking the AI industry right now. Here's what went down. Anthropic, the AI safety company behind the chatbot Claude, is accusing Chinese AI firms of running what can only be described as an industrial-scale copy operation. We're talking 24,000 fake accounts conducting roughly 16 million fraudulent data exchanges, all designed to extract and replicate Claude's capabilities. On screen right now, let that number sink in. 16 million exchanges through 24,000 fake accounts. This isn't a few bad actors poking around. This is organized, systematic, and enormous. The trick they used is called AI distillation. And it's exactly what it sounds like. Instead of doing years of research and spending billions to train your own model, you just bombard a smarter model with questions, collect its answers, and train your cheaper version on those. It's like copying the class topper's answer sheet and calling it your own education. Now, the biggest name Anthropic is calling out is Minimax, a Chinese AI startup, which allegedly ran over 13 million of those exchanges all by itself. And they weren't just asking random questions either. The fake accounts specifically targeted Claude's strongest areas: coding, multi-step reasoning, and connecting AI to real-world tools and software. That's not accidental. That's precision strike on exactly what makes Claude valuable. For context on why this matters beyond tech Twitter drama, Anthropic recently raised $30 billion from major investors, including Sequoia Capital and Founders Fund. And here's where it gets genuinely weird. At least a dozen of those same investors also back OpenAI, Anthropic's biggest rival. So the same money is funding both sides of the race, while a third party is allegedly out here just copying the homework. So that's the heist. But here's what's even more interesting: how Anthropic and OpenAI are actually tangled up with each other, and why their approach to AI safety couldn't be more different. That's coming up next. So now that we know what happened, the real question is, who actually makes money from this, and who takes the hit? Because markets don't wait for the dust to settle. They price this stuff in fast. Sound familiar? Every major geopolitical tech shock follows the same playbook. Some stocks surge, like some tank, and most business owners are left staring at headlines wondering what it means for them. Let's break it down. On the winner's side, look at your AI infrastructure companies first, NVIDIA and AMD. The companies making the specialized chips that are basically the engines powering every AI system out there. They stand to gain big. Why? Because when American companies decide they need secure, domestic AI instead of shared open ecosystems, they need more of those chips, fast. Cloud providers like AWS and Azure ride that same wave, since all that secure AI development has to run somewhere. And it runs on their infrastructure. As you can see on screen, these are the domestic acceleration plays analysts are already watching. Then there's cybersecurity, CrowdStrike, Palo Alto Networks. When a high-profile breach goes public, every AI company suddenly has a panic audit on their calendar. That's direct revenue. Government contracts, enterprise deals. The demand spike is almost automatic, and the chart shows exactly why both names are flagged as near-term beneficiaries. US AI startups with locked-down proprietary tech also get a valuation premium. Investors will literally pay more for companies that can prove their IP isn't walking out the door. On the losing side, Chinese tech giants like Alibaba and Tencent face real sell-off pressure. Sanctions risk, reduced US tech access, reputational drag. Global funds heavy on China exposure are suddenly dealing with what analysts call a geopolitical risk premium. Basically, investors saying, I need higher returns to justify this uncertainty. And here's the one thing that actually matters for your day-to-day. If you're using AI tools in your business right now, this is the moment to ask your vendor one simple question. Where is my data going, and who can access it? That question just got a lot more urgent. But here's what we haven't touched yet. What does this mean for the actual relationship between these AI companies? And where does regulation fit into all of this? That's exactly where we're headed next. But zoom out for a second, because the real story here isn't about one chatbot being copied. It's about what happens to the entire AI ecosystem when trust breaks down at a global scale. Let's start with something a little awkward. Picture a sponsor funding both teams in a championship match. That's essentially what's happening with the investor overlap between OpenAI and Anthropic. At least a dozen shared backers, including Sequoia and Founders Fund, have placed bets on both companies simultaneously. On the surface, that sounds clever. Diversified risk, money on both horses. But here's the uncomfortable question. When one of those companies is being systematically exploited by a third party, does that shared investment quietly reduce each company's incentive to truly outcompete and out-innovate the other? Or does it just mean the money always wins regardless of who gets copied? That's the dual bet dynamic, and it's worth sitting with. Now for the two big trends this whole situation is likely to accelerate. First, regulatory protection for AI intellectual property. Governments, especially in the US, are almost certainly going to fast-track legislation treating AI model weights as protected trade secrets. Think of model weights as the mathematical brain of an AI system, the core parameters that make it actually work. Right now, legally, that brain exists in a gray zone. That's about to change. Second, a bifurcation of the global AI market, a hard split into two separate tracks, a US-aligned ecosystem and a China-aligned one with very little crossover between them. And here's where it gets personal for a lot of you watching. If you're a small business, a freelancer, or an entrepreneur, especially in emerging markets like India, many of the affordable AI tools you use today exist because research and model outputs have flowed relatively freely across borders. A more closed, geopolitically divided AI world means higher costs and fewer choices, full stop. So here's the takeaway you actually need. The AI tools you use today are built on a foundation of global collaboration that is quietly fracturing. The entrepreneurs who clock this shift early, who choose their AI vendors and data strategies with eyes open, are going to be in a very different position from those who don't. Start asking harder questions. Where do your AI tools actually come from? Who really owns the intelligence behind them? That's not paranoia. That's just good strategy now. Thanks for watching this module. And if you want to go deeper on the geopolitical split in AI markets, that's exactly what we cover next.